Hi everyone, and welcome to Pinata Time, why we should all start bashing mules. It's a panel, and I'd like to welcome our panelists for today, starting with Stacy Purcell from Citi. Stacy's SVP Fraud Policy from Citibank. Hi, Stacy.
Hey, good day.
Andy Collins, Financial Crime Executive from Wells Fargo.
Howdy.
And we have Paul Gardner, Manager in Financial Crime in Suncorp from Australia.
G'day, how are we going?
And folks, if you have any questions to the panelists or to myself, you can use Pigeonhole, this application to ask interactive questions, and we'll do our best to answer them during the live broadcast for this panel. So let's kick it off. And of course, we're going to talk about mules. There are many types of mules. And I think before we actually start the mule typology and discussing those specific types of mules, at the end of the day, every type of financial crime, you have to think about where am I moving my money to, right? I'm not going to send money to myself. I need some sort of account. This might be a collaborator, like a human collaborator. This might be an account that I opened under someone else's name. But in any case, those are the mule accounts that we're going to talk about. And we're going to focus on fraud, so financial fraud and mules related to that. And this is essentially just to kick the conversation off, a little bit of a typology that looks at account opening versus existing accounts. So in account opening, you typically want to fight several types of fraud. You want to fight deposit account fraud, meaning an account like a bank account is open and money is deposited to that account. Credit or loan account fraud, meaning I open an account and instantly I have access to credit. First party fraud is I'm, trying to defraud the bank myself. But look at this intersection with money mules, mule account opening, meaning I'm opening an account not because I want to do instantly some fraud, but I want to use that account for any type of fraud that will follow on. And then you have the existing accounts. We talk about unwitting mules and professional mules or witting mules. So lots of different types of mules. And maybe before we move further into the conversation, let's just describe the sort of mules that you guys are seeing and how they're different from each other. Stacy, we'll start with you.
Sure. Yeah. Thanks, Yuri. So before COVID, before the pandemic really kicked off, I think, you saw more of the unwitting mules. You had a few professional mules mixed in there. But I think with the pandemic, we've seen what is, I would say, kind of an onslaught of a new kind of mule that's really targeting the government programs. So your unemployment insurance, the economic impact disaster loans in the U.S., just those programs that are really just have been created to get as much money into the hands of the people who really need it as quick as possible. And these mules, it's really kind of migrated from a small social media type of effort to get people to open up accounts for the use of being a mule to really just these large scale rings. So I think there's been a big shift with the pandemic to really move from those romance scam, unwitting mules, your one-off, business email compromise recipient mule account to just large scale targeted mule account openings, leveraging stolen PII to really get their hands on the pandemic funds. So I think across the industry, that's really what we're seeing, especially in the United States.
Andy, what is your perspective on this?
Yeah, well, I echo what Stacy said, Yuri. I would also add that, the weaknesses of the government were pretty much put on display during COVID, but also because the fraud actors were doing the same things that we were, seems like they were locked down, as we all were. They've spent a lot of time on online type of businesses. So we're seeing intentional mule account openings as well. The accounts are being used for fraud for these third-party businesses. For an example, we had a common issue with a few large property rental firms, and what the fraud actor was had a two-part story. One was they had a fake property owner, and then the second is that they had fake renters. And then the fake property owner, actually the fraud actor, actually opened a mule account with our bank and with others. And then it's used for two things. The first thing it's used for is to validate the fraudulent property owner themselves. And then once that account is validated, the fraud actor then makes fake rental deposits and moves the money out before, for instance, a bad credit card deposit actually comes back. And so they have, the point is that there's inherent weaknesses in third parties as well, and we're starting to see those, and the mule account is one way to get the money moving.
Okay, great. Hey, Paul, what sort of mules do you see in Australia?
Yeah, so echoing both Stacey and Andy's points, we see both the account opening mules, so mules that are facilitating an ID takeover and opening up an account to receive fraudulently obtained funds, both from our own customers, but also from other financial institutions or other sources of wealth. But we also see a small number, less and less all the time, of recruited mules. So those that might be an existing customer that have been recruited to siphon out scam funds or other funds that have been obtained by the fraudsters.
Right, and what's the split more or less from your perspective in Australia? Is it more account opening or wheating or unwheating existing mules?
Yeah, so having a rerun of the stats the other day, we can see that more than 90% of our mule accounts are account opening mules.
Okay, so newly opened accounts rather than trying to go after existing folks. 10 years ago, by the way, or 12 years ago, during the economic crisis, there was a lot of recruitment going on globally, in the US, in Australia, etc. And account opening was a non-issue. So just in 10 or 12 years, it flipped almost entirely. And account opening is now the main thing from your perspective. Stacey, what sort of statistics do you see in the US?
Yeah, I think it's probably on par with what our counterparts in Australia are seeing. The majority of our mules at this point in time, even just from a year ago, right? Let's not go a year ago. We'll go back, let's say 18 months ago, right? Before the pandemic. I think banks in the U.S. had a mule problem, but they were existing mules or unwitting mules, right? So you had your witting mules that had kind of been on your books probably at least 12 months or more, that you would get notified by the other FIs that there was some fishy activity going on. But I think in the last 9 to 12 months, we've seen that shift to account opening is where it's at, right? The breaches in the industry have just opened up doors to these fraudsters to open up these accounts. And it's shifted our focus, like you said, right? For years, on the credit side, there was this, a lot of emphasis on understanding identity theft and synthetic identities, and really jumping on the account opening fraud train. But on the bank side, our focus has always been third party, right? Third party fraud. Our job has been to make sure that person sitting down at that device is our client, right? And we've invested millions upon millions of dollars to ensure we have the right controls there. And it's just knocked us on our rear, right? It's changed our focus immensely to say, we've got to stop the mules and really it's game of whack-a-mole, right? It's like you shut one down and then you got to go over here. It's quite insane to see how it shifted, Yuri.
So, folks, if you were sitting on the advisory board of a cybercrime syndicate, and basically your role is to consult, would you recommend investing in account opening mules or trying to recruit existing mules? What would be your advice to the syndicate? Andy, maybe we'll start with you.
Yeah, I think I would do what the rest of the fraud actors are doing, and I would focus in on the account opening. And the reason for that is because, well, first of all, there's enough PII out in the environment to be able to use either bad information or even my own information, for that matter. But there's so many inherent weaknesses with third parties and government and so forth that I've mentioned that are just now being discovered. And to me, rather than have to recruit somebody and go through the time that it takes to actually have somebody come on board and be an unwitting mule, and then, or maybe even account takeover, why not just go ahead and attack some of these inherent weaknesses that are very evident? And I think that's what's happening. This is a whole brave new world for a lot of fraud actors that are now just seeing that the businesses that are being set up for online, and also for government especially, that there's just lots of opportunity to be able to defraud them.
By the way, you folks are coming from large financial organizations. Some of the smaller banks can really suffer from such a trend, because if you think about it, like if a small organization, let's say a new digital bank, etc., is being hit by a gang that wants to open multiple accounts, that's going to be problematic for them. There was a case in California a year and a half ago or 2 years ago where it was a new digital bank. They had more or less like 100 new applications per day. And all of a sudden it jumped to 1,000. And they said, hey, finally the marketing team is doing something. No, it's an attack. You have 100 good users and you have 900 bad users every day. Now, it might be deposit fraud, but it can also be opening mule accounts. Interestingly enough, it wasn't that it was some sort of bot account opening, like it wasn't automated. It was a human being, probably a single person, that was opening 900 applications per day. So that's essentially something that can almost like cripple a new financial organizations or small financial organization, because you can't really cope with those sort of numbers. If you have 100 good users, you have 900 bad users, you probably have to stop receiving new users, or maybe stop moving money out, going out of the bank or something like that. So definitely the small banks are also suffering. Do we have any specific interesting mule stories? Stacy, maybe you can share one of yours.
Sure. Yeah. No, I've got lots of them, Yuri. So, in the past, I had lots of great stories about business email compromise, mules that we've had, and, how we've been, the stories never match. And when you ask for answers, right, and they're very colorful. But, during the pandemic, as we started to see the surge of unemployment insurance payments from multiple states coming into one account, or SBA loan, idle loans coming into consumer bank accounts, right? Which isn't the norm. Not saying they're all fraud, but there's a lot of fraud in that piece, or opportunity there as well. But what we started to see was in kind of the dark web, and what people were hitting individuals up to do these mule account openings, and then obviously target the unemployment, get the money in, move the money out as quickly as they could through Cash App, Square, Zelle, any P2P, right? Debit card transactions, just get the money out as quickly as you can. But then the guidance that they were given was, then go ahead and file a dispute. So file a Reg E dispute against your financial institution. You'll get that money back in provisional credit right away. Take that money and run, right? So if you're leveraging, it's one thing when you're leveraging your own information to open an account and commit this type of activity. But especially if you're using stolen PII, you could care less, right? So we just started to see this surge of this incoming mule activity, dispute claims, giving them provisional credit, and then we never hear from them again, right? And obviously, it turns out, we should have never given them provisional credit. And this was an industry-wide thing, right? It wasn't just one FI. Everybody was seeing it. And what was even crazier is, you didn't realize, this was very early on in the pandemic when we were all kind of trying to get our hands around what we were dealing with. We started to do the link analysis. And when you started to look at, just what was logging in to your accounts from all over the world, you would have one user who had 27 different devices logging into that account, checking the balances. So you just realized how large this network was, of just how many people, what was in play here. And this was just the beginning, right? We're talking April of last year. So it was just kind of the, that double, what do they call it? Like the left hook, right? It stung because, it's bad enough that they're stealing money from the government. And as a US taxpayer, that hurts. But then to see them turn around and hurt the bank on top of it. Needless to say, we put the kibosh on that relatively quickly, but it was definitely a new spin. From a mule perspective, maybe not as sexy as some of the business email compromise stories, Yuri, but certainly a different spin that we weren't expecting.
Paul, any interesting stories from your end?
Yeah, so in Australia, we've seen significant evidence of mules being recirculated across the institutions, and predominantly what we saw in the last 18 months to 2 years is a number of mules that were opening up accounts across different banks. And the reason that they were doing that is to hop the funds and create distance between the originating account to obviously the exit point. And one of the things that we found through collaborating with our peers in the industry, because financial crime detection is not competitive, was a significant number of mules, many of which had the same attributes. And one of the benefits that we got from that was actually a benefit for one of our customers. We had an 80-year-old lady who was a victim of a scam. And because we'd identified a number of mule accounts opened by the same offenders, we were able to stop the funds, basically her life savings from exiting. And so that had a real benefit, and that came as a result of that. That collaboration across those institutions, but also by recognizing that, the MO was becoming more and more prominent through that online origination channel.
Excellent. Andy, any story from your side?
Oh yeah, there's a story a minute, sadly. I think one that I'll relay to you is a very, very, very large search engine company. They had a situation where, ourselves and other major financial institutions started getting a very high velocity of small dollar deposits. And that very, very large search engine company is also, as we would suspect, a marketing company. And so they pay individuals, clicks for click revenue, click ads. Yeah. So that type of velocity perhaps was not necessarily something they didn't expect. Well, all of a sudden we started having money go into new accounts that were set up for the purposes of moving money. And what was happening apparently is that on their side, somebody had gotten a hold of the accounts or the ACH account numbers used to be able to validate new accounts within their search engine. And so we were seeing, and other banks were seeing 30, 40, 50,000 different transactions per day inside of these mule accounts. And because a lot of banks don't necessarily look at the inbound transactions, they weren't necessarily hitting triggers, just a lot of deposits coming in, and then boom, the money was actually leaving. And so again, the weakness was not necessarily at the bank level, though you could certainly say that the absence of mule monitoring may have been, but the weakness was actually with the third party, that large search engine, and they weren't doing velocity checks. Right. So they didn't know where they had coming in and going out. And so that ended up being a very interesting case study. It took a while to resolve because they had to resolve it.
Right. Before we move on, one of the stories around unwitting mules is romance scams, right? Can anyone tell me a little bit about that and how they use it to recruit mules?
Yeah, I can take that one. So what we often see is we'll have clients who are almost tricked into through an online dating service or something to that effect, to entering into relationships with people who are perhaps not being as honest as they should be. They convince their clients that the funds they need to, utilize their bank account for whatever reason, right? There's a number of reasons that are leveraged, but they're they want to use our customers' bank account information to move money for their sister's surgery. And, because of the laws in the land where they live, they can't move the funds to their account, yada, yada, yada. And so the individual, our client, believes that the funds are for a good purpose and is for one thing, but they're actually stolen funds, either through business email compromise or unemployment payments, Social Security, whatever the case may be. They're unauthorized funds. It's stolen money. And our customer is given instructions. When you get the funds, send it here, move it here. So our customer legitimately has no idea that what they're doing is wrong. The sad thing is that even when you confront them with the evidence that what you're doing, you're taking part in, illicit activity, quite often it's a hard conversation because they're adamant that this is legitimate and their fiance in, insert country name here is legitimate, even though they've never seen them in person or, spoken to them over the phone. So it's a hard conversation, and they a lot of times there's a lot of money movement before you put the kibosh on it. But it's a very sad situation often that we have to deal with every day.
Yeah, and Yuri, let me also add. I know this is not romance, but we're seeing it seems like grandparent scams are picking up as well. And I know that my father was recently nearly a victim of that, where his grandson, my son, called him and said, "I've been arrested in West Virginia for a DUI, and can you please send money, $5,000 to bail me out?" And my father's index finger was really close to hitting that enter button if it wasn't for my watchful mother, who was looking over his shoulder and saying, "What are you doing?" And anyway, it was really well done. And I bring it up because I've heard several different instances of people, even locally, being attacked the same way.
Right. All right. I guess one of the main drivers for the U.S. mule industry is stimulus fraud. And what we see here is the percentage of claims that were basically fraudulent, from almost 0 to 56% in the state of Washington, or the fact that at some point in the state of Arizona, 82% of the population were unemployed, which of course just suggests there was a huge wave of fraud. Why, is fraud hitting the government relevant to the banks in the U.S.? What's the relationship between the two? Stacy.
Yeah. So, there's a lack, across the board. I think with the pandemic, it really brought to light that there was a push to, as soon as you could, get the money into the hands of the people that need it. Unfortunately, with that drive and that sense of we've got to help the people, there was a lot of missing due diligence, a lot of missing fraud controls that enabled the fraudsters to take advantage of it, right? And then you couple that with perhaps a lack of focus and visibility from the bank side to what could be done from a fraud app perspective, right? New account opening perspective. It was almost the perfect storm, Yuri. I think without having the right controls to validate the legitimacy of an unemployment claim or the legitimacy of an SBA loan under a certain threshold, if you didn't have those eyes on it, those controls in place, those velocity checks in place, right? If anybody took the time to read the SBA's review, internal audit of themselves that was released last year, it was eye-opening. And so I think for a lot of us, it was get the money in the hands of the people who need it at all, at all costs. And unfortunately, as you can see from those numbers on the screen with Arizona, that's exactly what it was, right? It's millions, hundreds of millions of dollars in stolen funds. So I think the environment was ripe. It was, like I said, the perfect storm. The environment was ripe for the taking, and that's what they did.
Yeah, and all of these billions of funds from state-level government agencies had to go somewhere, and obviously not to the real bank accounts of those criminals, but to mule accounts, which was driving a lot of the account opening activity. In Australia, did you see something similar, Paul?
Yeah, so we, during COVID, the government executed the early release superannuation scheme, and those in the US may not have heard of superannuation, but it's basically your savings from your income. And what we really saw was evidence that, something that a scheme or a saving facility that is not really designed to be used until you hit 65 years of age was also not designed to hand out $10,000 here and there. And there was really no effective controls from a velocity perspective, from an identity perspective, and from a transactional perspective, much of which we take for granted in banking. So we saw quite a bit of that, and the use of mules for other wealth funds plus our own to exit those funds.
Okay, I'd like to move to the second driver, which is faster payments. And the US has seen a lot of movement around faster payment in the last few years because of Zelle. Andy, you know so much about Zelle, and certainly whenever you have a new sort of scheme, you also need the money mules to go with it. What can you tell us about money mules and Zelle?
Well, I can tell you that when we first launched Zelle, we got our proverbial lunch eaten. It was a blood fest, and the reason that it was because we set up Zelle originally to do exactly what it was supposed to do, which is move money as quickly as possible. Right? That's the idea. We want to be able to move money now, not wait for it. And so I know that when we first launched it, we had some real failures. One of them was that we moved money without giving ourselves a breather. The breather, which we call more kind of a review and release. If something flags, make sure that if it's kind of sitting in the middle of being naughty or nice, that you look at it. And because it's one thing to for the naughties that are evident to stop them, but it's the ones that are in the middle. And the middle just ate us up. And so that desire for consumers and also banks and then also the competition with fintechs to move money as quickly as possible is really what Zelle is still all about. Well, because money is moving so quickly, and because, as with anything else, the mitigation tools being established to prevent fraud from occurring is moving much slower than the capability of moving the money fast, right? So banks have been spending the last several years catching up and making certain that those good fraud tools and mitigation are in place. Well, a lot are, but then the problem still is that if you're not looking out for your transactions that are incoming on the mule side, then you're probably not looking at everything that you need to. Outgoing money is certainly a risk, but I think banks are beginning to open their eyes that incoming money, especially when it's coming all kinds of different ways and very quickly at you, is also as much of a risk because it has to go someplace.
Right. So piñata time, why we should all start bashing mules, and Stacy, why would banks care about all of this? It doesn't really hit the bottom line. It's not a fraud issue. What's the real risk? Why focus on trying to detect those mules from your perspective?
The reason, a couple of reasons, right? First, it's the right thing to do, right? You don't want to allow your institution to be the one that allows fraudsters to move money in and subsequently out, right? So it's the right thing to do. I think as you look at the in the United Kingdom, as faster payments came on board, kind of the shift to really make sure it's not just making sure that user sitting down is your client and that they're authorized to make that transaction. It's making sure that we are all responsible, that we know what fraud we have on our own books, and that we're not allowing these accounts to be leveraged to receive those funds, right? So in the UK, there is a drive to make sure that you know what's coming into your account. And I think in the US, there's going to be a shift. And I unfortunately, I think the pandemic is going to help us get there a lot quicker than we would have. But there's going to be a shift from a regulatory perspective that I think there's going to be more eyes on us to make sure it's not just knowing your customer, right? It's making sure that your customer is doing the right thing, and it's monitoring those incoming payments to see these red flags. So I think there's going to be a shift there, but from a reputation perspective, I think it's regulatory and reputational. You just don't want to be known as the company that allows, the FI that allows money to flow freely in and out of your bank. So I think that's the push to all of us to do better.
Right. So sounds very logical. Let's actually start talking about how can we do all of this. So there are a lot of ways and tools and methods to do this mule bashing, starting with user data, trying to understand when user is opening an account, information about their KYC and national database linking, device recognition, link analysis around the phone, and other attributes. Obviously, after an account is opened, what is being done inside that account can also provide some clues. And then behavioral biometrics, when someone is opening an account, is the person familiar with the data that they're inserting? Are they familiar with the process of account opening? They're saying that they're like 70 years old. Does it match their actual behavior as they operate on a mobile device or move the mouse and move between fields and things like that? So these are some of the analysis layers that banks are using. Paul, let's start with you. What actually works well in terms of detecting mules? Can you talk a little bit about your mule detection program?
Yeah, so ours is very much layered, but the most successful thing that we use is behavioral biometrics. By applying known behaviors of mule account openers and leveraging that to then identify other accounts that have been opened using the device or otherwise is critical. The first use of that technology, we found 50 mules in the first 2 alerts. So behavioral biometrics is key. And then also leveraging some old-fashioned analysis and looking at what we're seeing and taking advantage of the known knowns, understanding and leveraging that information to shut down accounts that are behaving very much like mules. Okay.
Stacy, what's your experience here?
Yeah, I think it's just as Paul said, it's a layered approach. It's looking at stopping them from coming in the door, using behavioral biometrics, using some key third-party tools to ensure the validity of the information from a ownership perspective, for instance, phone ownership, things like that. And then once they're on the books, it's really looking at the incoming payments, making sure there's name matches on the incoming payments. It's having, utilization strategies, right? Most people who have normal consumer bank accounts aren't pulling in large sums of money and immediately depleting them while not having any normal consumer activity, right? Mortgage payments, bill payments, things like that. So it's building your strategies around what does a known mule look like, and anything that meets that criteria, just pop it out for somebody to take a look at. And it's really not as difficult as people have made it seem. It's relatively, I think it's going to be easy for people to do.
So Stacy, you mentioned behavioral biometrics, and also Paul, can you give a little bit more granular explanation of what it does for that specific thing?
Sure. Yeah. So the tools that we leverage is really looking at, so especially for account opening, it's looking at, are they cutting and pasting the name of the applicant into the application, because that's not normal behavior, right? You don't typically do that. So that cut and paste behavior becomes incredibly important as a giant red flag. That you don't want to let this guy in your house. So, and then once they're on the books, it's really, looking at the behavior, the age analysis is a big one too, right? Does the activity that they're performing really stay in line with what you expect? Paul, I don't want to steal all the thunder. I'll let you go ahead and jump in on how you leverage it.
Yeah, and I think it's learning and leveraging the networking analysis that's undertaken. So in addition to the cut and paste and the other activities such as the $15,000 in and straight out, it's also looking at, well, this device ID has been used previously, so let's go and find all the accounts that have been opened using the same device ID and shut them down, because we know that it's fraudulently used, so therefore we can assume this is the
you almost leverage the behavioral piece to identify the one account, and then through link analysis, you then
find additional ones.
Right. Yeah. You just identify 10, 20, 30, 40, 50. Yeah.
All right. Let's move to getting a buy-in. So we're all excited about, detecting those mules, but we need the budget for this, right? We need to create a program and hire people and maybe use some technology for that. We're going to run a small simulation. Andy is going to be the head of product. That has the budget for something like this. And Paul and Stacy, you are, the mule detection program advocates internally. And, go ahead and explain to Andy, why you need this sort of budget and what you're going to do with it.
So just to be clear, Yuri, I'm the guy that I need to echo the voices that have stood in the way of progress with this, right?
Exactly. Yeah,
okay.
But you should be reasonable. Listen to these guys and hear them out. Paul.
Okay.
Yeah, thank you. Well, Andy, you've got the cash, so we need to influence you. One of the key things we know is that most of our weak points exist on the customer side, and that includes in the detection of fraud, but also the detection of mules. And what would you say if I told you we could implement something that would reduce fraud losses and mules by up to 40%?
You've already got my attention.
Fantastic. Well, what I'm proposing, and I'll get Stacey to fill in as well, is that we embark on a proof of value. So we use a behavioral biometric solution in real world conditions to detect and shut down mule accounts and fraudulent behavior. So we use that proof of value to build our business case to justify a more substantive investment.
Yeah, and I would add, Andy, that I think it's important that we put money up against this from a short-term and long-term perspective, right? Short-term, let's stop getting these guys on our books, right? So let's put in the right controls, the behavioral biometrics. Let's invest in those controls, keep the bad guys out, right? Save our reputation, keep us out of regulatory scrutiny. But then from a long-term perspective, we need to develop and utilize tools to mitigate the mule problem from our books. So get rid of the mules sitting on our books today. So short-term, let's stop them from getting in the door. Long-term, let's get rid of them and protect ourselves from a reputational risk and perception issue, but also from a regulatory oversight perspective, let's stay off the radar as well, because we're doing the right thing. And that's the most important thing. Let's do the right thing.
Hey, can I go back to Paul's 40% again? Paul, was that a 40% reduction in the customer's fraud or the bank's fraud?
Yeah, it's a 40% reduction in the bank's fraud, but also that has a direct correlation with fraud against customers, because we're detecting those mule accounts, and it's neither of these things occur in isolation. So we're helping our customers.
Yep.
All right, folks, we need to wrap up. Andy, I hope that you were convinced.
Not yet,
listen,
but I'm
folks,
getting there.
At the end of the day, everyone is in the same boat. And just like, 10 seconds call to action by Stacy, maybe, what would be your, let's say that you have like a Super Bowl commercial and you need like a sentence just to summarize and wrap up all of this. What would you say?
I'm gonna steal the Nike slogan, and I'm going with "Just do it." Right. I was gonna go with Spike Lee. I think it is "Do the right thing." Right. I think that's probably not it, but yeah, let's just get it done. Invest now. It'll save you down the road. Really will.
Okay. Hey guys, I hope that it was insightful, interesting. We're happy to connect around all of this and bash those mules. Thank you very much.
Absolutely. Thank you, guys.
Thank you all.